So right now, the next one is tax benefits, okay? So talk about tax benefits. A lot of people don't realize this, but as you are homeowners, you know you get an itemized deduction on your property, right? It's the government's biggest giveaway that you have is a itemized deduction on your primary residence. Well, when you turn that into a rental or buy a rental property, you get a lot more tax benefits than you might have thought. And so we'll cover that for you. First of all, you get everything associated with the property expense-wise is a write-off, not just the mortgage interest and the property taxes. Not only that, y'all are small business owners. That's why you're here, or entrepreneurs. Each one of these houses is like a small business. It's great, and they include write-offs that go beyond just the payments on the property and the expenses of maintenance and management. They actually go on to paper write-offs. So, because you are an investor, you get other write-offs that you can talk to your CPA about, because I'm not a CPA. There's my disclaimer. If you want tax advice, talk to your accountant or your CPA. But you can also, when you go on a trip, if you go and you're an investor and you're going looking at timeshares, not to say you should buy one, part of that trip can also be, because you're a real estate investor, can be written off as well. So ask your accountant about additional write-offs and what's safe to write off based on the fact that you're a real estate investor now. Now, this is a big one. This is one that people really don't know. It's called depreciation. It's a paper write-off that the government allows, that you, as your real estate investment owners, it allows you to have a paper write-off or depreciate the property, the building, not the land. The government allows us to depreciate the building over 27 and a half years. Okay? So if you had a $200,000 piece of property and you took out the land, the building would be technically $150,000. This divided by 27 and a half is around $7,000 or $8,000 a year write-off. So this paper write-off comes also beyond the expenses. So let's say you have positive cash flow. So let's say you have a positive cash flow of $3,000 or $5,000 or $7,000 on the property. This depreciation write-off wipes that out. So it's like non-taxable or deferred taxable income. Now, if you own 10 of these, guess what happens to your depreciation write-off? It goes through the roof. So now you're talking, instead of $7,000 a year, you're talking about $70,000 in write-off. So we'll get into that a little bit. There are some income limitations. If you make too much money, you can't use the write-off, but it stores up in the property. It's actually a really good way for you to when your income goes down later on as you retire, that this depreciation that's stored in the property will help shelter your income in future years. So it is a tax shelter. We love tax shelters, right? So now, talk about tax-free gains. So when you sell your primary residence, you have what? If you've been there 2 out of the last 5 years, no capital gain. So that's a lot of the ways people get into investing. They either pull some cash out of their primary residence, or they sell it and buy more property. But I also am an advocate of holding on to the property and turning it into a rental property. So it's great. Primary residence, you know, we say in our first time home buying seminars, do you think that you wish if you talk to your grandparents or your parents, do you wish that you had kept your first home when you ask your parents? They inevitably say, yes, I wished I'd kept that first home, right? My dad bought the first house, I remember, in 1963 in San Mateo, California for $17,000. Now that house is worth $1.8 million, and it would have been paid off 10 years ago. He would have been an accidental millionaire. So that's what I call it. So in my book, I talk about the accidental millionaire. So tax-free gains, all right, so there's a way to do it through self-directed IRA. Does anybody have any IRAs? So you can invest in real estate and get all the tax benefits that you would get investing in stocks through a self-directed IRA. And you can even leverage, which means you can borrow to buy a property using a self-directed IRA as a down payment. So we teach a whole class on self-directed IRAs.